Hello and welcome to the live weekly market overview presented to you by Forex Academy. My name is Robert, and during this webinar we will be discussing a brief overview of the financial markets over the past week and apply a keen technical eye to multi-time frame analysis. Now, there is of course always risk inherent in trading the financial markets, so please do take a moment to familiarize yourself with the disclaimer. As always, just a few pieces of housekeeping before we begin. Feel free at any time to ask questions throughout the webinar. There is the chat box there located at the bottom right of your screen with the GoToWebinar software available. This live webinar is of course being recorded and will be placed into your members area once the webinar has concluded. And as always, finishing up the lesson, we will have a 15-minute question and answer session at the end of the live webinar. If you do have questions throughout the webinar, do not be afraid to put in your questions into the chat box, or if you prefer to keep your questions to the end, we'd be delighted to go through them with the end with you. In this webinar, we aim to analyze multi-time frame analysis. Specifically as technical traders and as traders of price action, we're not only concerned with trading one time period, and that's very important to point out. There is a lot more information, and that's key. Looking at the information and observing different time periods to let us know where the overall trend is, or where the technical analysis is pointed to in terms of future price expectations. You will often find with multi-time frame analysis that we get, as we stretch our observations out over long time frames, we get an overall picture of where the market fundamentally is moving to, and then we try and use those earlier shorter time periods to maybe preempt the trend before it explodes or before the trend fully matures. So allowing us to objectively look across different time periods with our analysis technically will allow us better trading opportunities. In the webinar, of course, we aim to assess dominant news events that affect the markets both in the short and medium term, and that will be prevalent in actually viewing that multi-time frame analysis. We'll look to assess activity, particularly in the Forex markets, given the amount of liquidity, given the amount of actual Forex trading assets there are out there within any given broker. We prefer to look across a broad range of Forex pairs, both the major minors and a few exotics, as they do offer a lot of opportunity. If we're talking about diversifying our portfolio, if we're talking about straying away from particular trades that the market is itself falling in love with, such as today, this whole sentiment-based trade of a weakening dollar, we can also look across maybe more unfamiliar Forex markets to look for those opportunities as well, given that the big trade in the dollar has found some price consolidation. So we'll focus on activity in the Forex markets and obviously apply technical analysis to a weekly market overview. So the hope is the webinar will explain to you what's happening in the markets this week and how the markets, particularly Forex markets, are reacting to some news events, and how we can apply our technical analysis to look for those trading opportunities that lie therein. How important to us as technical traders is multi-time frame analysis? I mean, before proceeding, as always, it's important to consider technical analysis on these different time frames in understanding that different time frames themselves can affect and influence other traders' decisions, and hopefully our trading decisions for the better. If we do see some news affect the market, let's say a big shock to the euro area, and we see a big sell-off in perhaps a euro dollar pair, that short burst of trading interaction in the market will dictate perhaps an overall trend for a period of days or weeks or months, depending on the news and the actual short-term effect on the market. So it is very important indeed to actually assess different time frames for those trading decisions. We can see more clearly what is actually happening and who is genuinely in control of each market. And that's most certainly true and indicative of candlestick structure. If, for example, we see 3 or 4 very bullish candlesticks within an hour period, so that's 4 hourly bullish candlesticks, well, the 4-hour period tells us a greater story that if we have an open and close from high to low, that the bulls are in control of that session, and then over the next 4-hour periods, a possible day to week, we are expecting a price to increase. The larger the time frame, the more significant the genuine level of support and resistance. Absolutely, and this coincides with technical analysis. As a technical student and a technical trader for many years, I can honestly say that technical analysis does work much more in much more defined areas over long time periods. For an example, using a level of support and resistance, or perhaps trying to identify a level of support and resistance over shorter time periods, for example, 5-minute charting, doesn't hold the same weight of resistance as opposed to perhaps a very strong level of support and resistance over a consolidated period of time. If we're looking at daily candlesticks and we can clearly see a floor in the level that has not been broken for perhaps 3 months, well, surely that is something significant as opposed to perhaps a support and resistance level judging 5-minute time periods. One grave advantage to observing the shorter time frames is, though, that they do assist with early identification of trend reversals or potential trend breakouts. So if the markets are perhaps consolidating, we can look at the shorter time periods, perhaps look at the candlestick structure of 1 or 2 time periods within a 3-4 hour period perhaps, and that can tell us where price is likely to move to in the short term. And if our overall directional bias is to perhaps buy the market and we see a rejection in the short term to some lows, perhaps over hourly candlesticks, that can give us an inclination. Look, we have a directional bias. How do we try and capture this momentum early? And hopefully that shorter trade will become a very profitable long-term trade. Now we'll just have a look this week, looking at the news events that dominated the market. We have seen some price growth in continuing to strengthen, particularly in Europe, back towards nominal 2% levels. Now, many market participants are concerned with ramifications that this may have an effect on European Central Bank President Mario Draghi continuing asset purchases programs and what it means for actual euro-denominated equity and currency assets. And that is the case. We are seeing some particularly US and euro area inflation on the rise, approaching our inflation 2% level. Policy may change and may start to shift considering QE and quantitative easing across Europe. How does that leave investor sentiment in terms of, well, a bullish equity stance or really bullish concern over euro-denominated assets such as euro currency pairs? We have seen some political instability with Theresa May there in Downing Street this week, and what that means exactly for Brexit deliberations. However, one thing to note is that the markets, as we look at the charts throughout, haven't necessarily reacted to this in a negative way or a positive way. We're seeing some continued volatility in many of these pairs, and that's indicative of actually how the markets have reacted, I would say, over the medium to long term with the last 6 months at least concerning the Brexit deliberations. We had the big shock, obviously, with the referendum. We have went through some hurdles in terms of a political accord and what that means for European trade. However, every little news article that starts to come out affecting whether a power struggle in the UK or the actual Euro, the short to medium term, and that's certainly what we've seen this week when looking at the weekly charts. We have a bit of a concern with rising interest rates and the concerns for rising treasury yields. And we have certainly seen that coming into the start of February, and as we finish off the month here in February, it has caused a real shock to the market, particularly the equity markets, where we're seeing interest rate increases. The dots are starting to connect with the US Federal Reserve, and we're looking for Mark Carney in the UK to follow suit. He clearly has, I suppose, pushed away from his forward guidance approach, and the market is really starting to view these expectations coming as rising interest rates will smooth out, I suppose, over 2018. Not a big issue as of yet in terms of UK policy. However, uh, given global growth and how the way things are going, and particularly in the euro area, we're starting to see these concerns feed into treasury yields as they rise across the world, and look for opportunities across interest rate markets that are feeding into the euro currency pairs. We have seen a little bit of a crisis in Latvia there the previous week. Mario Draghi himself has kind of tried to push it under the carpet with his conference. However, the markets are simmering over a potential crisis luring in Latvia, given that they are the third largest lender of European debt. And again, this would be a hampering story on euro-denominated assets, particularly euro currency pairs. Would see some volatility. May this story start to develop with some real concern. But as of yet, the markets are kind of pricing in a lax attitude towards policy decision there. Let's have a look at some of the Forex activity this week with the Forex markets in particular. Again, the US dollar remains weak across major pairs. No real surprise there. We've seen, I mean, that really has been the story of 2017. It has continued to be the story in January 2018, and long has it lasted throughout February. We have seen a bounce within the dollar index from the lows, and we're starting to see a bit of consolidation above lows of 88.045. One thing I would like to point out is that the market does have a real tendency to sell the dollar. It's the trade of, I suppose, 2017, and every time the bulls have come in to try and force price action up, we have seen structural failures to the upside. So bear in mind, if you're trading US dollars pairs, have a look at where the dollar index is trading, have a look at the long-term technical level, and do assess that, if you're trading over the next week, that if there is any significant figures coming out from the United States, whether it's a CPI or a non-farm figure, anything like that, we will certainly be able to see some volatility in the dollar itself as a currency, given where it is over the long term technically. So do be aware of that. The euro currency is, I suppose, certainly outperforming top major currencies. We have seen it lax off from the previous week, but as we look across the currency pairs now, we will see that it is continuing to be slightly bullish over those major pairs. So we are seeing capital flows trade into the euro. We're seeing economic growth in the euro area. We can see trade and capital flows start to feed into this confidence level, and out of assets like the Japanese yen as a safe haven currency. So it is something to look out for. We are seeing the euro in terms of pairing against assets like the US dollar and the Canadian dollar start to top out at high ranges or double tops. So it is at an inflection point, but we are seeing some continued strength in the euro. We have seen again some recent strength in the Canadian dollar, and that's very much reflective, we believe, of oil gains. We've seen almost in tandem and at the same time with the equity shocks there at the very start of the month of February. We've seen oil retrace from $63, $64 the whole way down crude oil to $58. The Canadian dollar did have a bit of volatility, obviously, as the market sold off, retracing, but now we're starting to see Canadian dollar gains as oil starts to retrace, come back up and trade above the $60 level. So we're fairly confident that for a second consecutive week, we're seeing some Canadian strength, and we're looking across the other correlated assets to look for trading opportunities. So there is consistent consolidating strength in the Canadian dollar over the past week or two. Again, the Japanese yen, the real story behind it over the last month particularly is the safe haven currency. If you're unaware, the Japanese yen often sees what's known as a flight of capital, when there is serious uncertainty within the equity markets, or the markets in general receive quite a shock. You'll see basically a store of wealth, capital flight push to investing in that store of wealth in Japanese yen to safe hold money. What we're seeing now is a bit of conforming to the risk of appetite, where the whole way through, I suppose, post Brexit 2016 through 2017, up until a very promising and strong bullish market for equities in January, we've seen that stall and certainly retrace with a very big shock and correction, particularly in US equities. We're now seeing a bit of a risk-off investor appetite flood into the equity markets, and we're seeing sort of consecutive consecutive moving candlesticks in many Japanese yen pairs. So we're looking for opportunity to hopefully follow this risk appetite, and long may it last through the course of the next week. Now what's left for us to do is observe the charts. We're going to look through 10 currency pairs that we really feel have opportunity in them, and highlight both fundamental and technical differences between. The first market that we'll look at is cable, otherwise known as the pound US dollar, and we'll look again at the weekly charts. We can see obviously we have a very strong price consolidation in a bullish trend to the upside. So as we just zoom in on this, what we note is a very, I suppose the real telltale sign is this bullish engulfing candle starting from January. Now, I just want to note this because this is the start of our price channel, and we're kind of in the midst of this price channel now with a bit of indecision. So as a long-term trader looking at these weekly levels, it does provide us with a little insight not to jump into a possible trend too early, and allow us a bit of patience to hopefully get a proper and direct price if we're looking to get long the market. But again, we're using our technical analysis wisely to look for a proper direct price to entry the market. Here we have lower lows, which is a real telltale sign that we are following this price consolidation to the upside. So in a very strong trend here indeed. And it's happened that many times that what we'd be very surprised, given the way the fundamentals are stacking up, is unless we get a real shock to the market, we do see potential upside within cable pound dollar. In terms of entering the market, the perfect structure here would to be in and around this price. That would conform to the fact that price does come back to our buy level at our channel, at a lower channel level, and allow us actually entry at quite a significant level. We see that we have this ascending triangle that formulated this price pattern. Consolidation did squeeze up to it quite significantly and then make a break to the upside. So that is the trade that we captured, of course, and the trade that we're looking to continue to follow momentum. If we get a bit of a structural failure and market comes down back to this price and looking for lift off again, technically that would be a very strong trade decision to take. But at the moment in cable pound dollar, we're not seeing any significant price action with this week's candle, and we're waiting. This is a real wait and see opportunity for a structure to be created in the market. Moving on to euro pound, we have seen something quite significant of late. However, given the way the market is trading, it's very much a flat market, which doesn't necessarily excite the trader. However, if we look closely, we can see that it does present it with a good opportunity if certain circumstances are met. What we can see here is a very strong level of support. and that's at our 87.80 level. Very, very strong level of support indeed. This is the second week of September, this candlestick here. So we're almost in this price range for maybe just under 6 months, which is quite significant given that the volatility is relatively low in this market. I mean, here's our highs here. In terms of full trading ranges and trends, we haven't seen a trend since early last year, and we have a real descending triangle to the downside, which would dictate to us that price consolidation is trying to squeeze lower. We have tried several times, but have been retraced on the daily candlesticks and lows from our resistance level. But as you can see, price continues to squeeze lower. This is one to watch. If we get a close below this level here with a weekly candlestick, that would constitute a sell trade. Would be looking most certainly to take a short position in this market, if only to bring trade down to the 83 level. It still does provide us with a very good risk reward on the trade, and looking for potential downside there in euro pound. Moving on then, we will then obviously have a quick look at our euro dollar. And the reason I say quick look is because we see that we have breaking a long term. If I actually zoom out on the price action, we've broken up. We're in a very strong trend to the upside, breaking our resistance level with the triangle again ascending at our 122 level. However, the recent price action isn't really giving us, specifically this week, any clues to where price is looking to move to. We're really consolidating within a short space of time. And something like this, if we actually realize that it is a euro pair like the dollar, could actually start to consolidate quite strongly at this level for a period of time. What would constitute a trading decision or further technical insight would be for the market to show some continuation to the upside, and that would follow a candlestick to trade up here and hopefully close above this level here as well. That would be significantly bullish for us to constitute trading decisions to the upside. At this level now, we're not sure whether the trade is to buy at the resistance level, and I hope, given that we can often see a reversal below the level indeed. Fundamentally, the picture isn't great for the euro area as well. We have seen the dollar index itself really hit lows and really have a double bottom across those lows. So this is the reverse trade buying the euro dollar. We need to see a confirmation of a breakout either way, and then we'll be in a better position technically to constitute trading decisions. Moving on to the US Canadian dollar, we can see that we have effectively a double bottom here. Something I'd like to point out, that the double bottom structure itself isn't perfect, but it does constitute lower lows and allow us to perhaps say that we've seen a bit of a trend reversal from a long-term price shift. So this is our long-term trade. Obviously coming from highs of 137 the whole way down to 121 is a very, very long-term trade indeed. And what we've seen is this double bottom price action here constitute pop up to a good level of support and resistance, create exactly what we want, price consolidation, and then a break lower as well. Once we see that that is rejected for the second time at a lower, at a higher low, then we can constitute our directional bias to say, well, we have become buyers in this market. We're looking to follow the momentum to the upside if the price action enables us the decision making tools. What I would again like to point out, if I just zoom into this a little closer, let's have a look at the most up-to-date, I suppose, resistance level in terms of a price structure at 126. I wonder if we notice anything peculiar. If we see that the last times these markets have traded up, we get the trend trade off, we get rejected from our price level, our genuine level of support and resistance within the candlestick. It's pushing to the downside. We also get the inverted hammer telling us that we're not getting any increased price action to the upside, and the trend negates and continues to the downside. Again, when we finally do get the breakthrough, we get the close above the level at this price here, but that creates a very short-lived price structure. So in terms of actually placing the trade, if we were to formulate a trade idea today, yes, we get the swinging lower double bottom. If the market were to close here, it doesn't necessarily constitute for us the most bullish price action in terms of trying to follow a major trend to the upside. What we'd like to see is for price to continue in a candlestick structure, hopefully in similar fashion to this, and actually close above our second level of support and above this area and this price consolidation here. That would be a long-term trade for us to take and constitute directional bias to the upside in the US dollar, Canadian dollar. If you move on now, having a look at the US dollar, Japanese yen, yes, we have seen the Japanese yen have a bit of price volatility with the equity sell-off, but it's a very difficult market to trade given how the US dollar weakness seems to be dominating the markets entirely. What we have seen is price structure over this long-term level at 107, a genuine level of support and resistance, really trade and smash through the level in the long term. We have seen previous lows really hold up the market here, and then the close below really gives us a sign that this market is weak. The dollar's weak against the yen strength, and particularly perhaps we've seen with last week's price action, the safe haven currency try and pull back up over the level where the technical analysts would have been watching, but we got rejected immediately from the level. And if we just zoom in closer to the price action, indeed, we'll be able to see that it's the candlestick structure itself negates any idea we may have possibly of looking to buy this market. So what do I mean by that specifically with the candlestick structure? Well, here is our engulfing bear candle. Now we do get a little resistance, but given the breakout to the downside, that's entirely normal. Then the bulls do try and come in with their candlestick, we'll call it candlestick 2 here, but that gets immediately traded up right to our level, which is technically very significant, and then traded and rejected to the downside. This is very much a bit of uncertainty, and we're very much in the middle of the week here, looking to see how this candle closes. Hopefully, will give us more information, hopefully to the downside. What would be a possible long-term trading decision is to observe candlestick structure, observing how price may break new lows, and if we certainly get new lows, I would assume fundamentally what's happening in the markets and with dollar weakness, that we get continued price action to the downside in dollar yen. Again, if we move on to the Australian dollar, what we're seeing here is again something very significant. There's quite a bit of technical analysis here with this candle over the long term, so do bear with me. First of all, we have a very, I suppose, well structured ascending triangle, which has been broken not once but twice. So that would let us to believe that this market is gone to the upside. However, as you can see, even the first time we create new highs, it has created a long-term structure where this market almost relies, looking at the chart, it seems to rely on its technical analysis with the Australian dollar, and actually retraces the whole way back down to our previous resistance level here. Doing that after, we see the market completely reverse from almost our ascending triangle and genuine level of support and resistance to the upside. And what we can see here is the cleanest double top that technical analysis will provide us. So we get the resistance again from the double top, and we get almost immediate and effective trading to the downside. Now, in terms of trading the market at the moment, we can see that price consolidation isn't particularly good at the moment. We're seeing a bit of volatility, really, within a weekly candlestick structure. We're not getting any clear or nicely closing candlesticks to tell us which way price would go. And actually looking at the candlesticks here, we can see that we have a little embodiment right at the middle of our full range, or trading range. So if we're either looking to become buyers, given that we've had the break to the upside, possibly we'd be looking for a price structure to come back down to maybe these levels, just with the lower lows as dictated. And that would really constitute, if we get a structural failure to the downside and a candlestick closing something like this, that would be the trade to look to follow some Australian dollar strength, and obviously follow the US dollar weakness. So certainly one to watch. If that were to occur, it would certainly be a very good technical setup. But as price sits today, it doesn't give us any inclination as to where future price may move to. Let's have a look at the Australian New Zealand dollar. I wanted to have a quick look at this today because I do see a very good technical setup. Now again, to reiterate, we're seeing lower lows here over the long term, so that would signify to us, with a very, very well structured resistance level, that there is some resistance to actual sellers coming into this market. It's just really at what point we're trying to find a good place to buy it. Technically, I mean, and again, we're seeing these structures start to develop all across the markets. Here, we're actually at this perfect inflection point this week. So this would be a possible trade decision that we could assume this week. And what we'll actually do is have a quick zoom in on the price action to have a bit more insight technically to what the candlestick tell us in nature. So just zooming in there, we have a spinning top candlestick. Now what the spinning top tells us, particularly with a structure like this, so I'll just call this candlestick 1 here, is actually indecision. We've had a sell-off within 3 what I would call bearish soldiers from a previous bit of consolidation. We get the sell-off, but the sell-off almost immediately stops with our spinning top indecision right at a resistance level. Now for anyone who likes to trade genuine levels of support and resistance, that is very technical indeed. That is very significant for the technical support and resistance trader. And we see with how the market is trading now midweek that candlestick 2 is showing rejection, first of all, to the downside, and is continuing to trade a little to the upside as price is negated at this price here. So if we get perhaps a close above this candlestick structure, or preferably above the high of this, that would certainly constitute a buy opportunity in the Australian dollar against the New Zealand dollar. And from a risk reward perspective, it's quite promising to the upside, because the next resistance level would be our 127 level, the whole way up there to top. That would constitute probably a 4.5 to 1 risk reward, which obviously, as a long-term forex trader, is absolutely a fantastic risk reward indeed. Moving across to Euro Canadian dollar, we see a very well structured price channel there indeed. Let's zoom in on the price action. We can see that we have lower lows. If we just get our epic pen again, we can have an outline of them. We see the resistance here. This is technically significant, this gap, telling us that the market jumps and certainly wants to move. I believe this was a French election decision, and we've seen price consolidate back into the range, giving us some indecision. But then we do get this very strong trend in terms of where we're at in most recent price action. If we can just zoom in, it's perhaps the most well pleasant, I suppose, disciplined euro trend across euro pairs, where we've seen a direct bounce from our channel level, and almost in a linear fashion we see this bullish trend start to develop in the euro CAD. So again, the candlestick structure for me today, just looking at it technically, would tell me that we're closing above a very well organized resistance level, a long-term resistance level here, and the close is certainly above it. For me, that's technically significant to the upside, even though we're coming up to the channel. then price speculation would conform to the upside if we get this close, and perhaps have a stop loss below these lows here, where that would be the retracement level. However, one thing, if you're deciding to trade this, I would like to point out is that let's have a look at the long-term picture with the euro Canadian dollar, because it does give me some concern as to potential upside in the market, where we can see, if I just zoom out, really we're almost at all-time highs, well, for a very long period indeed. We're reaching the 160 level here, which, as you can see, when we've touched the current level, we have retraced quite strongly. Given the price action here is 2014, quite a large trend to the downside. We had some significant volatility to the upside from our 160 level here, and then retracing immediately. And now we're finding a good structured channel to the upside with these lower lows, pushing momentum to the upside. But as technical analysts, we know that historical price action is very unique in telling us where the market will not trade as well. So we can see that there will be some serious work for the market to offer us a good return if we're to take a long position here, and for the market not to reverse. So everything really has to add up technically for this trade. Perhaps we could watch this market for the foreseeable future to see if it trades up and creates some structure here, where if we see obviously some euro weakness in the market, we can certainly look to jump on this trade to the downside and follow up momentum given the long-term price projection there. Moving across to the US dollar, Mexican dollar, we are seeing a bit of a technical setup as well. I quite like this technical setup given how weak the market has been. This was the whole, I suppose, Donald Trump phenomenon, if I call it that, really causing a lot of stir about Mexican construction of a border defense there to stop immigration into the United States, but obviously the political uncertainty that ensued, and we've seen it retrace. That retracement turned into something really quite deep with the US dollar deepening, and we've seen that it's starting to bounce from these lows. So generally markets can do this. They can really, once something is priced in and doesn't become a real formality, we're still yet to see obviously the wall being built, and the political I suppose rapture that caused hasn't really ensued. We've seen the bounce from from those previous lows. Now I like this price structure here because it comes right down to our level. It creates and commits to our long-term genuine level of support and resistance. Again, if we just take off our epic pen and decide to zoom in on the most relevant price action, it tells a very similar story. We get these indecision candles here with some spinning tops, some almost doji-like candles here. We have almost a doji here that rejects gives us an indecision, and then where does that indecision lead straight after? Well, it leads to the upside where the bulls come in and really force this market quite strongly to the upside. Now it does retrace and comes right back to guess where our level or genuine level of support and resistance. But these candlesticks are quite significant because this is 1, 2, 3, 4, 5, 6 weeks of consolidation, and every time we see the consolidation being pushed up within each weekly candlestick to the resistance level. So this candle here and where price leads, possibly above a break of this consolidation and a close above this, something like this, would certainly constitute for us a lot on the technical bullish side for the market. And the reason being, again, if we zoom out on some of the price action, we have higher lows from here to early September, again to the resistance level and that price consolidation now. So this does set up for us. Technically, if we do get a further bullish candlestick in next week's price action, that would certainly constitute some potential price expectation to the upside. Moving on to our final chart of the weekly analysis, we can look at the Euro Swiss franc. Now we have seen quite a strong bit of price consolidation leading to a channel to the upside, and that has reversed quite significantly in the previous price action. annotated just between our lines here. We have seen some previous, I suppose, closer price consolidation coming down. So it doesn't really allow us, I suppose, trend analysis or allow us to concentrate where price is moving to at the moment. But it obviously is starting to form a level of resistance there at 115, and doesn't seem to want to trade below this level and break out. Now, we're technical analysis, and we know that the euro is strong, but it would be very, very shrewd of us to be aware that if the market closes below this period here, that would constitute that the market is actually bearish for us, and we could actually see quite a sharp reversal to the downside. However, given a resistance level here in this price structure of indecision, the same would be said for a close above this level. So it's really much a wait and see trade now for a euro Swiss franc, and hoping to really get the confirmation over the next week or two. That concludes our chart observation for the week. Thank you very much for joining the webinar, and of course, as we finish the session with the Q&A, a quick 15-minute, a quick fire session round, I would be delighted to answer any of your questions. Thank you all so very much for joining us here on the Weekly Market Overview. I'm Robert, and from all of us here at Forex Academy, have a great day, and we'll see you next time.